The futures market. What is a futures contract? What is it for? How does its price change? Where can you find them? In this video, I will explain all this and much more so you can learn how to invest in this interesting market. Futures are agreements between two parties. One party agrees to buy an asset and the other party to sell it with a price that they establish from today, but for an exchange that will take place in the future. And that's where it gets its name. It is said that the party that agrees to buy has a long position and will benefit if the price rises, because it will receive an asset that is worth more than what it has agreed to pay for it. It is said that the party that agrees to sell has a short position and will benefit if the price falls, because it will deliver an asset that is now worth less than what it was initially agreed to. Imagine that you promised to sell a basket of apples for $10. Days before the delivery, the price of apples has fallen to $5 per basket. So what can you do? You buy the apples for $5 and sell them for $10 as you had initially committed, therefore earning $5 per basket. In the futures markets, all kinds of assets, such as stocks, currencies, grains, metals, energy, among many others, can be exchanged. However, the participants in this market do not have to produce any of these, nor do they have the barrels of oil, wheat, or cattle from operations they have done before at their houses. Most traders close their positions before the delivery date. If they have agreed to buy and the price has risen, they will close the positions with a profit. If the price has dropped, they must take a loss to get out. Participants in the futures market can be divided into groups: producers and speculators. This market was created thanks to producers in Japan in the 17th century, when farmers agreed to sell their rice before being harvested. This allowed them and their buyers to protect themselves against sudden price changes. Nowadays, it is the same. Producers use the futures market to protect themselves from price variations, and thus negotiate commodities knowing the price in advance. Speculators take advantage of the futures market to profit from price movements. Unlike the producers, speculators benefit from volatility in the markets. Future contracts are characterized by being standardized. The market is the only one that defines how many barrels, bushels, or ounces are traded per contract, where these are delivered, the quality that they should have, and the other conditions for each of the assets that are traded. The size of the contract. It is the amount of the asset that is being negotiated. For oil, it is 1,000 barrels. For gold, it is 100 ounces. The delivery specification. The place and conditions in which the underlying asset must be delivered. This information is extremely important for participants who plan to deliver the asset or receive it. The delivery month. Each contract has a delivery or expiration date. Most future contracts are closed before the delivery date arrives, and thanks to this, it is possible to speculate with these instruments without having to produce them or think about where to store them. Price. The futures market establishes the minimum changes that the price of a future might have. This minimum change is known as tick. Margins. A minimum amount of money must be kept in a broker's account to guarantee that the trader can respond to his losses in the event of adverse movements. How its price changes. As in any market, futures prices change due to the supply and demand of the participants. Higher interest for the December oil contract will cause its price to rise and less interest to fall. Where are they? The main future exchange in the world is the Chicago Mercantile Exchange. It is a highly regulated market that offers its participants total guarantee in their operations. In this market, it is possible to trade corn, soybeans, oil, natural gas, the future of the SP 500, American Treasury bonds, currencies such as the yen, euro, the pound sterling, metals such as gold, platinum, copper, among many others. How to start? If you want to start in this market, in the description of this video, I will leave you a link so you can download a demo account to trade futures in NinjaTrader.